today I'm tackling credit card APRs with an explanation for beginners. When looking at loans and credit cards, it can be a confusing world, and I would bet that you didn't get taught this at school. Now, it doesn't matter whether you are on a journey to get debt-free or whether you are considering getting a new credit card, taking out a loan, and are looking at the options that are right for you, it is important to know what the terms mean, and APR is a big one. Welcome to the Looking After Your Pennies YouTube channel. My name is Charlotte Jessup, and I talk about all things making money, saving money, investing in your future, and basically anything to do with your finances. I'm here to navigate the tricky world of money and to fill in the gaps that maybe you missed out on around your financial education in school. And today I'm going to be covering this topic of APRs. So in this video, I'm going to be looking at the following. What is APR? What is the difference between APR and interest rates? What are flat interest rates? How to work out APR, how to use an APR calculator, and how you can reduce your APR. So let's jump straight in. So what is APR? APR stands for annual percentage rate. It is used for working out the costs of loans and credit cards, and it can be useful when comparing them. When advertising loans and credit cards, lenders are required by the Financial Conduct Authority, or the FCA, to display the APR of their product. This must be present on all marketing materials. However, your APR may be different. It will depend on your personal circumstances. And at the moment, the world of advertising isn't quite clever enough to get this right for you on every ad. Although I think they're probably capable of doing it, they haven't done it yet. Instead, what you will see on this advertising is a typical or representative APR. And this is calculated based on averages. The rate that is displayed on adverts or marketing materials is the rate that at least 51% of people are offered. So what that means is that 49% of people will not be offered that rate, and it is likely that they will be offered a higher rate, although it could be lower too. So whilst it is a good measure when it comes to comparing credit cards or loans, it might not be the rate that you get. So what is the difference between APR and interest rates? So normally you will hear people kind of use these terms interchangeably, but it's not really fair to do so. Although they have some similarities, they are not strictly speaking the same thing. Now, the interest rate is the percentage that you will be paying back on whatever amount that you borrow. So whilst this might be a number that is similar to the APR, it is not everything that that particular credit card or loan is going to cost you. What the APR does is actually includes the interest rate as well as any other additional fees that are a part of having that loan or a part of taking out that credit card. So normally this figure is going to be higher than the interest rate that you pay on that card. Examples of other fees that you might have to pay include application fees or any other yearly fees just for having that card. So I know that I have an American Express card that I paid £25 a year to have. So that would be included in the APR figure, but not the interest rate figure, because those are two separate things. And it is for this reason that it is probably sensible to use the APR when comparing cards. You don't want to pick one that has a low interest rate, but then has loads of additional fees on top of it. So if you look at the APR, that will cover the cost of the whole thing, including those fees. So it's probably much more representative of what that particular loan or borrowing is going to cost you. So let's talk about flat interest rates. So these are different from APR, and they're really important to know about so that you can watch out for them. These aren't a good thing. So if you see this, don't be lured in and think it's something special. You want to try and avoid these. So flat rate loans are more expensive. Whereas with APR, the interest rate is normally worked out daily, calculated and added on monthly, and it is based on the amount of borrowing that you have left. So whatever you owe at that point, it calculates what you pay in interest at that particular time. Whereas with flat rate interest, they calculate the interest on the initial borrowing amount. So this means that you could say take out a loan for a car and you would have to pay interest on the initial amount, even though you have paid off some of that loan. And this is why they work out more expensive. They are pretty rare these days. You are unlikely to see them, but they do still exist. And the reason that they still exist and the reason that some people are still using them is because they actually sound cheaper. You might find that you get a lower interest rate, but that's because they can afford to do that, because you're going to be paying that interest rate on that full amount that you take out at the start. So make sure when you're looking to take out a loan that you look for those letters APR, and this will tell you that it is calculated on what you have left to pay. So how do you work out APR? Now normally when you're taking out a loan, they will tell you the APR, but sometimes you might want to work that out for yourself. Perhaps you're on a debt-free journey and you want to use the debt avalanche method. So this is where you tackle your debt in order of the highest APR to the lowest, so the ones that are costing you more first. So given that the APR is like the best way to compare them, you're probably going to want to work this out. Now you could try ringing your credit card provider or your loan provider and just asking them. But you might be like me and only make phone calls if absolutely necessary, so you might want to try working this out for yourself. This can get a little complicated when you are applying it to credit cards, because normally this involves borrowing at different times. So in this instance, you might have to go and speak to that credit provider or just try looking it up on their online system. However, if you want to do this for a loan, then it should be fairly straightforward, and I would talk you through that calculation now. So step one is to add up all of the interest you have paid. You should see this as like interest payments on your statement, and you need to add that to any fees that you have paid too. Step two is to divide this by the total amount of the loan. This is why it's easier to do it with a loan amount. Say you borrowed £5,000, so you take up everything you've paid in terms of interest and fees and you divide that by the total loan amount. So step three is to divide by the total loan term in days. So not months, not years, in days. So if the total loan term is 2 years, then this will be 730 days that you will need to divide by. Step four is to multiply this by 365 to get your total figure for the year. And then step 5 is to times this by 100 to turn it into a percentage. And that should give you your personal APR for your particular loan. Now, I'm a big nerd, so I love to do these sorts of calculations. But if this is not right for you, then don't worry. I will now show you a calculator that you can use that will do it for you. So using an APR calculator. Now, luckily, Experian have an online APR calculator for you. It is an American site, so it has a little dollars symbol at the front. You can just ignore that, pretend it's pounds. You don't need to do any fancy conversions. Just use your figures and just pretend that it is a pound sign. So you need to enter into this page the loan amount, the interest rate, any fees you are paying, and the length of the term of that loan. And then click calculate, and it will show you your APR for that particular loan. It's a really easy to use website, and it can really help you when making these comparisons about your loan. There's some nice graphs that you can look at too, but it does all of that stuff that I talked about in the last section in just like a click of a button. So in this last section, I want to talk about how you can potentially lower your APR. So you might be partway through paying off your loan, or maybe you've had a credit card for a while and you want to speed up your debt-free journey and paying this off. Well, you can still have the option of reducing your APR. Now, unfortunately, this is going to involve a phone call with your lender, but it should be worth it in the end. Now, when you ring them up, you can ask them to do a couple of things. You can ask them to reduce your interest rate, or to maybe waive some of the fees that you are paying on your card. So this could be fees around, annual fees, or it could be if you're getting a new card, you could potentially ask them to reduce the application fee, which will reduce your APR overall. Now, it is more likely that they will consider waiving some of those fees, but they don't have to do any of this. This is a case of if you don't ask, you don't get. But it can be a worthwhile conversation. I know lots of people that have actually had some success doing this. And if it could speed up your debt-free journey, then it could be something that is good for you to try out. Now, it works best if you give them some good reasons to do this. So this could mean you explain in your situation. So you could tell them that you've been a good customer, you've been regularly paying off, you are asking them to help you out a little bit by waiving this fee here or reducing your interest rate a little bit, and they might show some sympathy towards your story. You could also explain if maybe you are struggling and how it would help you stay on top of your debts and ensure that you can actually pay them back. Be truthful about your story and see what they can do for you. Like I said, there are no guarantees that this is going to work out. But if you set aside 10 minutes a day to ring up your credit card companies, ring up your loans companies, and just ask the question, then you never know. It might work out in your favor. So that's it. That is credit card APR explained for beginners. I hope that it's been educational for you and will help you navigate the world of credit cards and loans more easily. Please do use the comment section below to leave your thoughts or ask any questions that you have around this topic. I really do appreciate your time to write these and will endeavour to reply to as many as I can. And don't forget to hit that subscribe button. I have 2 videos going out every week around financial education topics. So make sure that you do not miss out on those by clicking that button. Thank you again for coming to watch this video. I really appreciate your time and I hope that you have found some value in this content. I will see you in the next one. Bye.